What is going on, investors? Hopefully, you guys had a great week out there. And I tell you what, if you didn't, it's about to get a lot better because it is time for the FANG Stock Recap Show, where every Friday we go over all the major FANG stocks plus Microsoft and Tesla here on the show. We'll talk about all the major news. Let's not waste any more of your time. You got a sunny weekend ahead of you. We'll kick things off like we always do with Facebook. Started the week at $328. End of the week really nicely up strong. Down a little bit today. Most of the tech was down today, but maybe it's because everybody made a bunch of money on this and they sold and they went out on their Hamptons boat and out to the island for the weekend. Yep, at 341 on Facebook. You guessed it. We broke above that trend we've been talking about for nearly 2 weeks here on the show, and we broke above it. We'll talk about that when we get over the stock chart with Facebook. So there's a new FTC chair, and it looks like he got approved, and he's going to appoint a new antitrust chief. This gentleman has been very critical of big tech, Google, Facebook, Amazon, Apple. We'll see what happens. I don't know. Well, this could be just a ploy to raise money. I don't know, because these companies, Google, Facebook, Amazon, Apple, collectively, they donate millions and millions of dollars to one political party, and then that political party gets in power. And it just doesn't make a lot of sense that they would come down really super hard on them. I think, in my opinion, this is just me thinking out loud, that this is just the threat of them coming down hard on them. And then what does that lead to? More and more money. We've got another election cycle coming up in a year and a half. So yeah, of course, these people need money to get elected. And who's got the money? Big tech. So we'll see what happens there. Facebook soft launches its Clubhouse rival live audio room. So this is to a select group of users on Facebook. They're testing this out. We'll go over Amazon here in a minute. These companies, especially Apple, launched a new podcasting feature. Amazon has gone big into podcast. Facebook is starting to move into the audio realm. They see it as a way to a stickiness way to kind of get you to stay on the platform, because if you're listening to a podcast or even a video like this, well, you might hang around for 10, 15, 20, 30 minutes. So these companies are moving deep into that. Now, Facebook, this is interesting, it expands its shops to WhatsApp Marketplace. So you can have these shops. It goes to the marketplace now. It can go to Instagram. It can go to WhatsApp. It's kind of integrated. This is interesting. If you're into e-commerce, this might be something that you explore more, because Facebook is getting deep into commerce, and that's a next growth driver for them. Moving on to Apple, start of the week at 129, soft today, but up marginally for the week, up to 133. We'll talk about if it has reached a critical level along with Facebook and some of these other stocks in the technical level here in a minute. Now, Apple's retail chief says all stores, these are the Apple stores that you can go to and buy a phone or look at the computers or their products, that all the stores are now open and employee attrition rates are below the pandemic levels, which means they're not having problems retaining employees like you might see out there with some other employers. So that is good for Apple. Now, Apple has, this is according to Webbush, that Daniel Ives thinks that Apple has a $20 per share overhang from antitrust concerns. Okay, so the stock's at 133. He thinks if all this antitrust stuff, the FTC guy, the lawsuit with Epic Games, those types of things are just kind of weighing over Apple's stock, and he thinks it'd be $20 higher if it wasn't for that. He also makes a note here. He doesn't necessarily specifically call this out, but that Facebook and Alphabet, which is Google, are more in the crosshairs. So if Apple's overhang is $20, which is 15% of the stock price, what's Facebook and Google's overhang on that? So we'll see what happens there. Moving on to Amazon, ton of news. If you like Amazon, you like Tesla, that's where a lot of the news came from this week. Amazon started the week at 3,446, slid down. This is one of the stocks that actually had a bad week and was down on the week, end of the week at 3,000. $401. Now, Amazon Web Services, AWS, acquired encrypted chat company Wicker. I actually used this app. I can't remember exactly why I used it, but interesting acquisition here. It could be that they roll this up into their other products, or that Wicker actually had some encrypted features that AWS wanted access to apply to maybe the Ring, a product that they have, maybe some other stuff that they have internally at Amazon. Amazon's Music acquires podcast ad platform Art19. I thought this was interesting. So we talked about how Facebook's getting into audio, adding different features for podcast publishers and those types of things. Amazon diving into that as well, getting into that podcast, that stickiness. It's a really easy way to add a bunch of content to your platform, right? If you own a podcast or you have a podcast, well, you send it out to Apple, you send it out to Spotify, you send it out to all these places. Well, now you're going to send it out to Amazon Music, and potentially maybe run ads on that now that they acquired this platform. We'll see what happens there. Now, big news coming out of Amazon is Teamsters, which I think is one of the largest, like, organized, unionized. They're kind of a specialist when it comes to unionizing. Now, they want to organize Amazon even more, okay? And so Amazon had that push, I think it was like in Alabama, where the vote failed. Well, these union leaders are not giving up. And I'll tell you why they're not giving up. Because Amazon has hired, just in 2020, they hired 400,000 jobs. So a union boss says, oh boy, if I got a tiny percent of each of those people's salary, which is exactly why a union exists, basically, well, that'd be a lot of money. And so they are salivating over that. We'll see if that push leads to an actual formation of a union. Now, what they are targeting, and they have very valid points here, is that Amazon is getting big into the transportation industry. Obviously, you look at probably in your neighborhood, you see those Amazon trucks driving around. Now, what is interesting is the people that are driving those trucks, I think that's a third party. Basically, a third party owns those trucks. It's similar to the FedEx model. But if you drive for UPS or FedEx, you make big money, okay? I actually have some friends in my family. I know some other people out there that work for UPS and FedEx. They live in nice houses. They have money. They work very hard, don't get me wrong, but they get paid very well, and that's not necessarily the case with Amazon. So this Teamster union is saying, well, wait a second. UPS and FedEx do very well. We just did a video on FedEx yesterday, and they're making plenty of money, believe me, not only for themselves, their employees, but also the shareholders as well. So Amazon is being accused that maybe they could pay their drivers more. So we'll see what happens there. Now, Amazon is eyeing a stake in self-driving truck company Plus. So there's a reason why I put this story right after this one, where their Teamsters is organizing this union effort, particularly in the transportation industry. Well, guess what Amazon's going to do? Okay, you guys unionize, maybe it works, maybe it doesn't. Well, what's Amazon going to do? And this is down the road, so not necessarily next year or 2 years from now, or maybe even 5 years from now, but likely within the next 10 years. What are they going to do? They're just going to eliminate those jobs, or eliminate a portion of them. Okay, maybe you can't eliminate all the jobs, but they're going to have autonomous trucks. They're not going to have a human driving these things, okay? So they already have an order in for 1,000 autonomous trucks, and they're looking to acquire a 20% stake in this self-driving company called Plus. We'll see what happens there. Amazon's deal to buy MGM to be reviewed by the FTC. Again, nothing that we wouldn't expect here. Amazon made that big purchase. I think it was, about $8.5 billion. This is not for MGM, MGM Grand, or the Aria, or the Vdara, or, the other properties that they have there in Las Vegas. This is a completely separate company, okay? It owns things like James Bond and other TV and movie assets, okay? This is the studios of MGM. This will be reviewed by the FTC. I don't necessarily think that that was something that investors didn't anticipate, but I think this is a deal that if it doesn't go through, it wouldn't necessarily be negative for Amazon, but it would just slow down their ability to grow their streaming video product. Because if the FTC doesn't allow them to buy movie production companies like this, well, they're not going to be able to do anything in the future necessarily, at least from an acquisition point of view. So investors will want to see this deal go through, and I can imagine It probably will, but look, I don't know. I can't predict anything in Washington these days. Now, Amazon Prime Day's first day, I don't have any numbers on the second day, but the first day of sales is expected to exceed 5.6 billion. So just on the first day of Amazon Prime Day, which I think was Monday, and then Tuesday was the second day. So Adobe says the most money spent exceeded the $5.1 billion spent over the Thanksgiving holiday. So this was multiple days. Last year, $5.1 billion was spent just on day one of Prime Day, $5.6 billion. So it's a massive, massive day. I certainly saw my sales spike on my Amazon account as well. Now, proposed U.S. antitrust bill could force Amazon to sell its logistics business. So again, we've got a bill proposed by a House Democrat, but he does have, or maybe she has bipartisan support here that could force Amazon to sell its logistics business. So we saw other bills threatening to be introduced that could force Amazon to maybe sell AWS or spin it off. We'll see what happens. As a shareholder of Amazon, I think I'd be less worried about AWS being spun off because that is a very mature business. And while it does integrate well with Amazon.com, it's not necessarily, a rapidly growing business in its infancy. I still think the logistics business at Amazon is in its infancy and it will get very big and could be one of the bigger business units in the business. So I'd like to see it stay in Amazon.com. If they were having to spin it off, well, as a shareholder, you'd likely benefit. We'll see what happens. Again, I am a little cynical, as you could probably tell, when it comes to Washington, D.C. politics. Doesn't matter if you're Democrat or a Republican. The way I see it is these bills get introduced, and I don't necessarily think it's to, a lot of time, there's a lot of bills that are introduced. They're not always to pass law. They're often introduced to raise money because that's what these politicians need. And we'll see if that is the case with this. I don't know if I'm right or wrong there. We'll see. Now, moving on to Netflix, talk about not necessarily a breakout, but the uptrend that we talked about last week. I think for the last 2, maybe even 3 weeks, we've talked about, hey, if you like Netflix at the area that it was at, it was a buying opportunity, and it showed up this week. Boy, we started the week at $4.95 on this one, ended at $5.27. We get over the stock chart on that one. I think you'll like what you see. Now, Netflix gets bullish upgrade from Credit Suisse on normalizing subscriber growth. So I think what they're talking about here is that obviously the pandemic just exploded Netflix's subscriber growth and people got really excited. And obviously the stock really appreciated it. And now we've seen like a lot of these stocks that kind of gone sideways. And now it takes a while for the investors to get comfortable. Well, Netflix is not growing their subscribers like they used to, but it's still a gigantic business and it is doing very well. So that's kind of normalizing the subscriber growth. It's not what we're used to, but it's a new, quote unquote, new normal. That term's getting thrown out there a lot. So Credit Suisse has a price target of $586. The stock's currently at $527. It's interesting. They shout out that $586 level. It's a little bit, that's basically all-time high. So it's a pretty safe call that sellers would step in here at the all-time highs and come back down. When we get over to Netflix, we'll talk a little bit more about that. Now, moving on to Google. Start of the week, Google's just on it's like where's a broken record in here. Start of the week, 2,402. End of the week, you guessed it, up at 2,449. This stock just makes new highs week after week after week. I get a lot of comments here on my channel. I'd never buy at all-time highs. I don't buy at all-time highs. I tell you what, guys, I dip buy. I love buying the dip, but I think the second, some of the best purchases I've ever made in my stock career is actually buying a stock when it breaks to all-time highs, because guess what is above the all-time highs? Absolutely nothing. It's like all the turbulence, all the price action of a stock before it hits all-time highs. This is all like turbulence. This is like when you're in an airplane, you're jumping around, and then finally you get up to that altitude where the air is crystal clean. That's like a stock breaking to all-time highs. So I like it. So here's the big news out of Google. Okay, Google's delaying its Chrome phase out of tracking cookies until late 2023. I think they were going to end it by 2022. Now they're phasing it out by 2023. If you own websites like I do, your earnings have been boop really, really bad. So all this cookie stuff, Apple doing the not allowing apps to track. There's just a lot of this going out. It's putting a lot of pressure on advertisers. It'll eventually work itself out and things will get a little bit better. New technology will be introduced and things like that. But it's showing you that Google is saying, hey, we can't phase these cookies out. Cookies is what tracks you along the web. They're saying, hey, we can't phase these out yet. And they're saying it's because of the industry and all this. No, it's Google's profit. It's Google's bottom line that can't handle this, at least yet. So we'll see what happens there. Moving on to Microsoft, start of the week at 197. And no, wait, that's a year. I was going to say, wow, that was a heck of a week. So we started the week at 259, close to 260 on Microsoft. Still had a nice week. Still broke out. Went into the $2 trillion club, which we'll talk about here in a second. At the end of the week at 265. The stock chart's interesting on that one. Now, the big news out of Microsoft is they unveiled their Windows 11 for a holiday 2021 release. What's interesting is it'll have a new app store and it won't charge any fees to developers. I tell you what, I want to put on my developer hat and start making some Windows 11 apps, because if they're not going to charge any fees, that'll be interesting. And again, that's a shot at Apple, which takes that 30% fee. They're in that battle with Epic Games, which makes Fortnite. So we'll see what happens. It could be that this judge strikes. It could be that the judge strikes down Apple's App Store 30% fee. It could be that they don't. It could be that they strike it down and then it's stuck in appeals court for whatever, for years, but the market has a way to combat that. And that's by Microsoft having no fees. That's by Amazon having no fees. That's by Google cutting their fees, starting to undercut Apple, forcing Apple to make some changes or eventually just show their market dominance that they can charge 30%. And developers are still willing to pay. We'll see what happens. We're still in the early stage of figuring that out. We'll see how that, kind of materializes over the rest of this year and even into next year. Microsoft, like I said, joined the $2 trillion club. This is in terms of market cap on Microsoft. And it's just, a sign of how strong Microsoft shares have been over the last year or so. Now, moving on to Tesla. Speaking of strong, hello, another breakout alert like we talked about with Tesla on the stock. I don't want to be patting myself on the back. I don't want to try to do that. But if you're a regular viewer of the show, we've talked about this, okay? Tesla was in kind of a descending wedge formation, however technically you want to do it. But it was going to break out one way or another, okay? And it broke to the upside because we started the week at 617 on this one. And I talked about if this thing broke up, 650, 670, 750, 800s back in play on Tesla. We rallied hard up to 671. Exciting for anybody that's long Tesla shares. Now, who's not long Tesla shares anymore? That's Panasonic. That's because they bought 1.4 million Tesla shares for, just $21. That's $21 in 2010. So 11 years ago, they bought Tesla shares for $21 for $30 million. And that stake, when they sold it, was roughly $700 million plus. So they made boatloads of money on Tesla stock. This is interesting. Now, Tesla was sued over fees at supercharger stations. So here's the deal. If you own I think it's a Model S and a Model X, they're higher end cars. If you have that, I think you get free supercharging for life. And I'm putting that in quote because a customer was imposed a fee when he or she left his car at a supercharger station. So he plugs in his Tesla, probably goes shopping or whatever, and leaves it there. The battery gets charged, so now he's kind of taking up a space at one of these supercharger stations, which can be an issue. If you have a Tesla or have driven enough in one, sometimes you arrive at these supercharger stations and there's none available, okay? And so what Tesla is doing is if your battery is charged and your Tesla is still sitting there, now they will charge a fee. And so this person is saying, well, wait a second, I was supposed to get supercharging for life for free, and now you're charging me a fee. So I'm not a lawyer, look, and I think you guys can realize that, okay? I'm not much of anything, but maybe somebody that posts videos on YouTube. But I will say, I kind of agree with the person that has the Model S here. Look, look, you got supercharging for life, and now you're imposing these other little ticky-tack fees. I think there's got to be a way for Tesla to deal with this, and we'll see what happens there. Now, speaking of the supercharger network, Tesla is expected to open their supercharger network to other automakers. So this is awesome. Talked about this on the show. I know the United States government and politicians out there are saying, hey, we're going to build a supercharger network. No, you're not. Like literally, no, you're not. Not in a short period of time. Okay. Anything done by the government takes way longer and costs way more than it normally, not everything, but something like a supercharger network, especially where you're having to build something and where they're potentially doing it themselves. It's not going to happen. It's literally not going to happen. So Tesla's already spent this money. They've already built out a significant network. It could be built out even further. But they built out a significant network, and Tesla's, in my opinion, is doing the right thing by vertically integrating this a little bit, similar to what Amazon did. Okay, AWS, Amazon Web Services, started so Amazon's.com wouldn't crash during Black Friday. That's the only reason why AWS existed. They didn't intend to open up a cloud computing company and lease that space out. Well, no, Amazon built it so Amazon.com didn't crash. And then they realized a week later, when nobody was on Amazon.com, or not as many people were on Amazon.com, well, now we got all this extra server space. What the heck do we do with it? Well, we lease it out to other companies, other websites. The same thing. I mean, Amazon has just done that business model perfectly, in my opinion, over the last decade or two. Tesla doing the same thing with their thing. And look, they'll probably lease out their self-driving. They'll lease out their battery technology. I think Tesla, there's a lot of levers that they can pull. I know that selling the cars is what everybody focuses on, but there's other little bits and pieces of this business that I think are maybe as valuable or maybe more valuable than selling the cars. And it could be that selling the cars is the loss leader. It's like Amazon selling a TV for 1% margin. Well, that allowed them to have AWS. That allows them to have an advertising business. It allows them to have a logistics business, on and on and on. I think you can draw your conclusions there. Elon Musk, Starlink won't go public for a few years, but Tesla investors could access the IPO. So here's a tweet. Somebody would talk to him about, hey, any thoughts on a Starlink IPO? Starlink is like I think it's like satellite internet to a certain degree. It's probably a little more complicated than that, but he says at least for a few years before Starlink revenue is reasonably predictable, going public sooner than that would be very painful. Will do my best to give long-term Tesla shareholders preference. Hello, I'm a long-term Tesla shareholder. I'll take some Starlink IPO as well. So we'll see if Elon Musk can come forth on that promise too. He's made a lot of promises over the years. It's not always the best at it. We'll see if he's able to deliver on that one. Now, major automakers turn the corner on global chip shortage. Hello, this worked out a lot faster than I think a lot of people anticipated, but UBS is cautiously optimistic that the worst may be over in terms of negative impacts in the automobile sector for the global chip shortage. So obviously General Motors was closing down areas of their production plants. Ford, GM, Volkswagen, Tesla, even everybody was having problems with it. It looks like this is starting to resolve itself. And we could get into this big macro debate, what this means for inflation and that it could be transitory when you're talking about things like this, but maybe we'll save that for the Saturday show. This video will be way too long if we get into those discussions. Tesla to hold artificial or AI event this summer. So AI Day is coming, and Elon Musk said it's really the purpose is for recruiting. So he wants to have this event to tout what they are doing at Tesla to recruit other people to likely develop for them or come work for them. So I thought that was interesting, but we'll get an update on the self-driving, the software, the hardware, all the stuff that Tesla has going on. Could drive the stock a little bit, but these days tend to get a little overhyped by the investor community that, Tesla Day, Battery Day, AI Day, these things are going to just rocket the stock up into the stratosphere. Not really, technically, which we'll start going over, and we'll look at Tesla here in a second. That drives the stock, in my opinion, a little bit more than these one day, 2 day events or whatever it might be. Now, Moving on to the stock charts. Hello, Facebook's been on a rocket move. We were stuck here in neutral at about 330, 331, 332, give or take a couple bucks. We've been talking about it like all month, every week here on the show. We've been talking about, hey, we're here at 330 on Facebook. It's either going to go up or down here. Okay. And if we break up, look, we could have a Google situation. Look at Google's chart. Okay. This is Google. Once it broke, these were the highs for Google. And this was back in last year, like it's September or something. Once it broke up above them, it consolidated sideways there for a little bit, and then it broke up sideways, broke up, kind of just continued to go up. So that's the excitement that you have when you break these highs. And I know there'll be people, I don't buy at all-time highs. I don't buy stocks at all-time highs. Actually, there are traders that are very, very good and very, very wealthy. This is what they trade on. They wait for these big green candles to show up, this confirmation, because this is just clear airspace. So we'll see what happens with Facebook. But when you make this type of move, it doesn't always happen, but there's a higher probability that this thing just is going to keep rolling on, okay? And we've got earnings with all these companies within the next month or so. So we'll see how this stock reacts. Now, it ran up into earnings last time, and the same thing could be true here as well with Facebook. Now, moving on to Apple, similar situation, not identical to Facebook, but we've been on a nice run. Again, we're about a month away from Apple earnings. We're sitting here, a critical level with this one is right at 135. You can draw this line in a number of different ways. Some people, the critical level might be at 135. It's really a range. You're right where the stock is right now, 133, 135, but it goes all the way up to about 138. You'd want to break above 138. There's a small cluster of candles up here in the 140 range, which represents all-time highs for Apple. You're looking for the stock to break up above that, just like we did with Facebook. Okay, we're looking for a break above and then a run, and we're kind of looking for that with Apple, or you're looking for a breakdown, which we'll talk about here in a second with Amazon. But you hit your head on here and you could come back down. It could create buying opportunities there. Now, Amazon was right there last week. I have my line drawn up here. You could probably move it down here into the $3,530 range. That is proven right in that 355 range with Amazon. $3,555 per share. Sellers have just stepped in, and it happened again this week. Okay, we hit our head on it. Sellers stepped in on this one, and it came back down. I tell you what, you come all the way down here to 3,100 on this one. It's probably a buying opportunity. You are about a month away for earnings on Amazon, so you just want to keep that in the back of your head. I wouldn't necessarily run out and do a shorter term trade on something like this when you have earnings approaching. Again, we know that they have a new CEO coming in. The last thing that Amazon wants to do is introduce a new CEO, especially when, it's one thing when you're on your second, third, fourth CEO. When you replace Jeff Bezos, the last thing you want to have happen to the stock is for it to epically go down, because then Jeff Bezos is going to be like, oh crap, I'm going to have to go back to work. So we'll see what happens with Amazon, but it did get rejected at that upper range. And so really we're on watch for Apple next week. Will it perform a similar maneuver? Will it go the way Facebook did, or will it go the way Amazon did where it got rejected? So we'll see what happens there. Now, Netflix is kind of in the middle of the range, but look where it wants to go. We talked about this box. So here for the last 3 months here almost on the show, really 2 months here on the show, we've talked about between 480 and 515 on this one. If you like Netflix, it's a stock you want to get into. This was a buying opportunity, okay? Yeah, it could have gotten a little better. He could have been down in this range, but really we could probably move that line right up to there. And this was a buying opportunity, and look what happened. Once it broke above the 511 range, it ran to 520, and honestly, there's not a lot stopping this from going to 540, which is about $13 higher. And it wouldn't surprise me if we come all the way back up in here in the 560 range. And then you're at an inflection point, just like Apple is, just like Amazon was this week. Will it go the route of Facebook, Google, Microsoft, which we'll see here in a second? Will it break above? Will sellers step in here and send this one down? We'll see what happens there. Now, Google, you don't need any sophisticated technical analysis on this one. This is just the textbook example of when a stock breaks to all-time highs, it doesn't mean that you can't buy it. okay? Because here's where we broke to all-time highs. This is down in the 1750 range. The stock is currently at $2,500. Now, what I will say is if you want to play the breakout, you want to play a breakout in Apple, maybe Amazon recovers a little bit, even this Facebook one, this could just be the beginning. Look, this could just be the beginning. We could rally hard on Facebook, okay? Because you look what Google's done. They're both in the same business, right? Okay, and so their stocks you could make the argument that both their stocks will perform relatively similar. So this thing has been on a run, but you put a stop loss in, okay? With Facebook, you're putting your stop loss in here at 330, probably 330, maybe 329 or somewhere down in here. Because yeah, if you break this area right here, well, the trend has been broken and the higher probability that you're coming back down. Same thing with Google. Okay, you want to play this trend, this uptrend, put your stop loss somewhere in here at, I don't know, 2,300, 2,400, 20, I don't care where you put it in. This thing just keeps wanting to go up and up and up. And so it gives the argument that yes, you can play that momentum. Now, speaking of momentum, same thing with Microsoft. We talked about here just last couple weeks that we saw it go up. We saw it got rejected, but it came back down to a very reasonable level. We're not concerned at all. We figured it would bounce. And could we get above this 260 range? And yes, we did. We're at 265. So two things can happen. This could be kind of a false breakout, just a couple candles up here and break down. We've seen that with Amazon. We've seen that with Apple. We've seen that with other stocks here. The other thing that could happen is we could just keep rip roaring. Now, the other thing that could happen is we could come back down here and retest this trend line that we have in here. That wouldn't be a problem. You break down here, you hold this area of support, and you continue to move higher. Because look, we have a high, higher high, higher high, higher high. So even if this stock were to come down, and as long as it came back up above 267 on this one, well, that uptrend is still intact. So Microsoft looking pretty strong as well. Now, speaking of strong, hello, get your Arnold Schwarzenegger guns out because this one looks strong. We talked about it here on the show. Once you broke above 633, I mean, I say this, you can go, all these Fang Stock recap shows are in a playlist. You can watch them and just fast forward to the end. We always do Tesla technical analysis right at the end. We talked about it. It's a broken record. If you got above 627, 630-ish on this one, a green candle showed up, which is exactly what happened. I'll even zoom in a little bit to show you because this is really all that matters. Well, then everything else up here was play. 700s in play, 750s in play, 800s in play, 850s in play, 900s in play. And that's until further notice. We got to get past it. There's a big area, and it didn't surprise me at all that Tesla kind of stalled out right here. Right at about $700 per share. Okay, it's at 670-ish right now. It got up to close to 700 and kind of walked itself back. No big deal, in my opinion. Okay, it's not at all surprising that sellers step in at this level. It was a top here. It was acted as support here. Once it broke hard. Now it's acting as resistance. Now you're looking for Tesla to get above 700. If you don't get above 700, not a big deal. You could come all the way back down here to 600. Wouldn't be concerning at all, as long as you resumed an uptrend, because now it looks like Tesla's got something like that going on. Okay. And so, yes, it could come back down into this level, 650, 640, somewhere in that range, and then keep moving up. But you got to get above 700. There's a significant amount of cluster of candles there. There was some volume back in these days as well. So you get above that, then yes, of course, 750, 800, 850, 900 back in play. Honestly, wouldn't surprise me one bit if Tesla gets there. So hopefully you guys enjoyed this video and enjoy your weekend. Get out and have a little bit of fun in the sun wherever you might be. Just want to say I thank all of you for tuning in. We'll be back again next Friday. Good luck with your investments.